The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good day, money masters and treasure hunters. Welcome to the December 11th terrific Thursday edition of Hour 2 of the Trader's Edge. I'm your host, Steve Rhodes, and hope that you're off to a great start of your day. Let's make sure that you and I, that we do all that we can do to have an extraordinary day. Let's always remember what's talked about is a dream. What's envisioned, it's darn right exciting. But what becomes planned is possible. But most importantly, what's scheduled becomes reality. And I want to thank you for scheduling your time with me. I am grateful for your presence here today. I'm here to serve you. So go ahead, give me a call at 877-927-6648. Internationally, you can reach out at 727-445-1044. That way you and I, we can go analyze your chart, whatever it is, any stock, any commodity, any indice, any correlation that you want to go ahead and take a look at. Remember, if you've got a question, somebody else has that exact same question. So don't call in for yourself. Certainly don't call in for me. Let's make sure that you call in for someone else. Random act of kindness. And that is the way that you and I need to live each and every day of our lives. Of course, this is Terrific Thursday. This is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now we got Dow. The Dow is trading up 164 points. That's trading out at 17,695. S&P up 21 points, trading at 2,047. Composite up 54, trading at 47.38. Russell up about almost 14 points at 11.75 and change. DAX up 67. FTSE's down 34. Gold is back $11. Silver off 14 pennies out here. Light sweet crude off 32 cents. Leading the charge to the upside, it's Restoration Hardware up $10. Athena Health, ATHN, up about $10, up 8%. Sherwin-Williams, they're painting the town green right now. That's up $8 and change. Agios Pharmaceuticals up 7. IBB up $5. Alexion Pharmaceuticals up 5. Lululemon up about 5. Baidu up 5. Biogen up 4. Amazon up 3. To the downside, Copa Holdings, cut, paste, and assemble. CPA's its ticker symbol. They're back about 2%, down $2 and change. British American TOB, I don't remember. BTI is the ticker symbol, not to be confused with BTO. BT Blackman Turner Overdrive. BTI, that's off $2. CF Industries down 2. Spirit Airlines, one that's got that island top reversal at all-time highs. Looks like toil in trouble, something like that. I'd have to go back to my old Macbeth days. That's a long, long time ago. That is back. Got off Spirit Airlines. That's off a couple of bucks. Methode Electronics down $2. You've got Men's Warehouse off $1.46. Randgold Resources off $1.49. Inter Oil Corp. IOC off $1.45. Okay, so where I know where you want to start. You want to start with the indices, the Dow, the S&P, the composite, and you're saying. I hear somebody saying, "Hey, Steve-O, is the bottom in?" Hey, if the bottom's not in, it's going to be formed by tomorrow. You know, we've got kind of wacky days out here. But the major bottom, no, the major bottom was October, so the major bottom is in. The next intermediate term bottom is the one that is forming. Whether it wasn't Tuesday, could have been yesterday / then today, could be tomorrow. But that next bottom is here. Santa's going to be delivering all kinds of good things, all kinds of toys and presents and candy canes, and no coal. Basically, the coal mine has been shut down. So it's going to be a heck of a holiday season. It's going to go beyond what Santa has said to me. He said, I've got the memo. I can't distribute the memo. If I do that, then bad things, then I'll get coal. So I don't want to do that. But what I can do is I can be a spokesman for Santa. And he said the rally's going to go on beyond the end of the year out here. So that's a good thing for the Bulls. Right now, Dow up 166. Let's go see what it is doing out here. I trade out at 17,669. This is the weekly chart we've got up on our screen. Let's go take a look at the daily chart. We'll put up a daily chart for you. Actually, you know what? Let's do this. I'd rather do this. Let me go over to my long-term charts out here. Let's start with the S&P 500. Let's keep it to the weekly chart. I'll go ahead and put up the Dow. This way, what we're going to look at here, in this case, we're going to look at horizontal, in this case, also diagonal levels of support and resistance. So it's the S&P 500. It's the weekly chart that is up on my screen. The green lines going across my screen horizontally, the solid lines here. These are the weekly horizontal trading range boundary lines. Slightly different than Bud Rolf's work for primary trading ranges out here. And the reason is because I've got this all automated. It's using the actual candles. It's identifying the largest number of opens and closes. It's using those two quadrants, which, by the way, in the case of the S&P, it's this big old dashed line down here right around the 1110 level. That is your number one touch point area for the number of opens and closes out here. But needless to say, so basically what you want to pay attention to with regard to the horizontal stair-stepping approach out here, what we have seen take place this week, and it's really not that unusual. In fact, it is very usual. If we take a look at what took place inside of the Dow, now my charts, my dates on the bottom of the screen, because I know you're watching us in HD out here. You've got November 3rd. The only thing I wish that eSignal would do is put it as the week ending date, because I'm not good. I don't know if this week had 5 trading days, and I got to add 4 to it, so it was the weekend at 11/7. I guess I probably can do that. I can always do that. So it was it's when I get into the months and I got to deal with 31 and which way, October, and in any event here, the week beginning November 3rd looks like the week ended November 7th. We saw that the S&P broke through its next ceiling level, its next horizontal trading range boundary line, got slightly up above it. The week ended October 14th. Check me out. Make sure I'm actually adding 4 and I'm getting to the weekend date out here just to maybe tie out to what you're looking at. And all that we really saw price bump its head up against this diagonal resistance, this price channel line out here, which is contained price, but price can break above this. Just because this price channel's out here, that's the highs. At one point in time was lower than this, so it is a natural area of resistance, most certainly. What has price done this week? It's come right back down to that area where it broke out of. When you break out of a level of resistance, what you really like to do is you really like to see price come back and test it and prove itself to you that it's done. What am I talking about? Hey, let's go take a look at what happened back in October. Just take a look at what happened in October. If you take a look at what occurred back on the week beginning April 21st, 2014, actually, I should say, well, it really was February 2014. This area here of 1844, we saw price kind of move sideways for a while. You finally got a breakout of that area, the 1844 level. The next area of resistance from a horizontal standpoint was going to be 2028. Now, we're using these as Barbosa would say, as guidelines, right? We don't use this as exactamundo. We use this as pretty good guidelines out here. Price got up to 2020 back the week of September the 19th out there, 2020 versus 2028. That's good enough for me in my line of work out here. And, of course, as price came careening down back in October, forming the low that was to be expected, was absolutely to be expected. In fact, for it to not occur would have been the unexpected, just to make it easier, to make it an easy thing to take a look at. What did price do? It found support at that 1844 level. Now you're up above that 2028. All that price has done this week is come back to test that area. Look, if price were to close below that, that's a different, that says you come all the way back to the 1844 level. Then I could get into that camp. First stop would be 1936. But that's not the camp we should be in, because at this stage what we know is this level that's held as support. So what does this actually mean to us? Well, if this level doesn't get tested again, it says 2120 is the area where we will see price get up to your 2048. 2120 is another, 70, 80 points. So you got about 70 or 80 points. I would almost have to say with something short of 1,000% certainty Nah, I can't say 1,000% certainty. I can't be that certain about that. Maybe 2,000%. I can't even say that. 2120 is the next spot for price to head to inside the S&P 500 before it gets to the 2211 and then the 2350, 2450 range out there. That is what's going on with your S&P 500. If we go take a look at the Dow, let's go do the same thing. INDU. Let's go see what it's been doing on its weekly chart. This will take just a moment to populate. Now, I can switch over to charts. We can put the daily lines. We can put the monthly lines on this. So the Dow is giving us the message here. We can see its primary weekly trading ranges. And guess what? We're way above the floor at 17,163. So the Dow says all that it's really done this week is come back and test that midpoint area, 17,722. Look, if the Dow's got some chinks in its armor out here, and it may, then it says price should come back to about 17,163.19, give or take $10, $15, something like that. That's where it would come back to. Otherwise, all the Dow is actually doing this week is just coming back and testing a midpoint area. That's a kind of a common occurrence out here with the way that these trading ranges work. So what does that tell us? That says the Dow trading at 17,703. She wants to trade up to 18,281 or so. That's its next level of natural resistance on its weekly chart. Now, that's the weekly chart. Just as an idea, I'll stay on the weekly time frame. I'll come on over. Let me go edit the charts. They've got this pretty cool tool here. Very cool tool. And if we go take a look at these primary trading ranges, you're looking here at the at basically the control center for where I can go ahead and decide which labels I want to put. If I want to go ahead and put the monthly labels, those are going to show up in whichever colors it is that I have set here, kind of like this orange and red level. Now, I'll just pull this off to the side. What we can see here, so if we were wondering, we were saying, hey, Steve-O, why did price in the Dow stop around the 18,000 level? Was it because it was 18,000? I would say no. It stopped at that level because it was the midpoint of the monthly horizontal trading ranges, 18,013. So price just simply got up there. We're just kind of careening inside this little area here. Once we see the Dow get above 18,013, you can expect another 270 points or so for price to actually get up and test that horizontal line on its weekly chart of resistance out there. That is what's going on inside of the Dow. Now, let's go take a look at what's going on inside of the composite, COMPQ. Let's go see what we've got going on out here. Let's keep our weekly chart on the screen. And what does our weekly chart show? I mean, God, really, folks, does it get any easier than this? With regard to, yeah, you got to have the tools for sure, but you know, if you put these tools in your what Bass likes to call his Sears and Roebuck toolbox out there, and there were no better tools than the Craftsman tools, right? As a kid growing up, I don't know about you, Craftsman has do they still make Craftsman tools? Haven't been in a Sears in a while out there, but they come with a lifetime warranty on those tools, and the reason is because they were built so well out there. Well, you know, here's a tool that you most certainly want to have inside your toolbox, and that's these horizontal lines of support and resistance out here. Well, what do we know about the composite? Well, we know a number of things. Number one, the composite is trading into its 2,000 swing point. You trade inside a swing point, volume or not, doesn't matter. You're basically going to go test the highs. So what is the composite going to do? It's going to go test the highs. It doesn't have a choice. It's signed up for that deal. Once it's inside there, that's what it's going to do. When we get back from the break, let's look at the composite on a weekly basis, which all it's really done is come back to test support, the floor of support in the 47.14 level. This is Steve Rhodes. This is TFNN. We'll be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risks, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Right now, you got the Dow's up 202, S&P's up 25, Composite is up 66 points out here. When we get back from this break, then we'll go back and we'll go to the Dow. We'll take a look at that long-term chart. We'll take a look at those horizontal trading ranges. We'll take a look at the Composite, actually, because it's next up, 49.19. Maybe how about 5,068? We'll be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 217, S&P up 27, Composite up 72, Russell up by 18 points. We'll go back over right now and take a look at that. The horizontal trading ranges inside of the NASDAQ Composite. So, you know what it did here this week. This is a weekly chart that we're taking a look at. Well, first of all, we saw the Composite break above its weekly horizontal trading range. That was the week. That was the week before we were going into the week we were going into Thanksgiving. The week began November the 24th. Price got above that. This week, all it did was came back and tested it. Found support here. I've turned on the monthly horizontal trading range lines as well. 46.53 was that level. So prices above that. What this says is that the composite is on its way to 49.19, and then somewhere between the 5,068 to 51.23 mark. Let me turn the weeklies off here. We'll go take a look at the monthly, and this way we'll take us all the way back into the 2000 time frame out here. So we'll come all the way back, and you can see that what is actually likely to occur inside of the composite this time around is that it'll actually take out the 2000 highs. I would have to say that's my expectation. So the 51.32, it gets taken out, and we move all the way up into about the 54.82 level. 54.82, maybe that sets a significant top out here, but it's not going to be the swing point that we're trading in, which is the swing point from March of 2000. I think that gets taken out. That's its midpoint, and I would say on this run here, what we see is the composite make way up to about the 5,500 level. That's what's going on there. If I take a look at the IWM, not that I mean to put the IWM, I meant to put the Russell 2000 up here. Same thing. A little bit, when I say the same thing, the difference is going to be dividends and fees. So as we take a look at the Russell 2000, now here's a monthly chart out here. So just to kind of give you a feel for how these trading ranges work, these horizontal trading ranges, as I mentioned to you, this trading range, the largest area that was used in identifying the largest number of co-located, means whether it was an open or a close, was all the way down here at the 484 level. So these areas, these horizontal boxes, so to speak, were formed a long time ago. But and that being said, and it just you do an automatic calculation here, and so take a look at price. You know, we have been traveling in a consolidation range for quite a while. The consolidation range, the actual breakout of the long-term consolidation range, has a price projection of 1350. I don't believe that that's where the Russell 2000 stops. Remember, when you break a horizontal trading range out here, consolidation area, your move is going to be equal to or greater than the consolidation. Well, when we take a look at what the Russell 2000 has been doing, it has been trying to crack through the ice, the overhead resistance here, ever since December of 2013. It's been this 1198 area. It's acted as resistance. We tested it last month. Last month, you got up to a high of 1191. This week, right now, you're trading at 1180. As soon as we clear the 1189, close above 1189, and the real close above 1189 would really be 1212, because that's our swing point high. So that's the March of 2014. Once the Russell gets above that, what we're looking at is a Russell that's going to move to 1307 to 1424. I can go ahead and put the weekly trading range boundary lines. Let me put the weeklies on here as well. Those will show up as a green line, but really, as it gets so clustered, let me come over here to a weekly chart just to give you a feel for what we're looking at. So what ought to happen with the Russell is it ought to get above, just to set an expectation level, above the 1212 area, and then run into some resistance at about 1234. That's the weekly horizontal trading range out there. Once you clear 1234, that's when you're going to see the next move up into the 1307, probably 1350 type range as it moves up. So that takes care of the S&P, that takes care of the Dow, the Russell 2000, NASDAQ Composite, so that you know what is going on there. And that's just normal, natural areas of resistance. Inside the Russell on a weekly basis, we can see all of these dojis out here in a row. You got 1, 2, 3, 4 dojis. Even this week right now is a little doji candle. Those doji candles, they mean the market is just simply tired. That's all that it means. And when the Russell 2000 gets tired these days, the only energy that it has to the downside pushes you down into the 1151 level. 1150, 197 the week that began November 17th. 1154.05, that was the last week. This week here, 1153. And that is what? That's your weekly. Let me just come back here. I'll turn off the monthly just to make it a little bit easier and clearer for you to see. Nothing coming right back down to a level of support. It is a beautiful thing out here, and that's what the markets are doing. It's a reason why the markets, it's one of the many reasons why the markets are going to go ahead and move higher. Not just through the end of the year, but beyond that as well. Now let's go. So that's what the stock charts are telling me. Just I want to be really clear. You're paying me, and you're paying me a fortune, by the way. You're paying me to read the stock charts and just share with you information. Now, this is all these lines, these horizontal lines and diagonal lines, things that we draw. This is all stuff that you can do too as well. You don't have to be any kind. You don't have to even understand swing points, A to B equals CD patterns or anything like that. Just natural areas of price and resistance, and that way you can really set the expectation. But you can see by taking a look at past pattern behavior that until proven otherwise, this is really what the market is doing. So it's nice to know, hey, why is it moving down to an area and testing that and then rejecting it, and then what does it want to do? What does it want to do? Where does it want to go from here out there? Remember, we're using a number of different tools to help us identify where price is headed to. Now let's take a look at some things here that are moving in the market. This way we don't have to go look at the diamond, the SPY, the Q, and the IWM. You already know what, in essence, they are doing out here. But we can go take a look at some stocks that are moving and grooving. Let's go take a look at Oxford Industries. OXM is the ticker symbol. That's trading down about $4 off 6%. Looks like they had a third quarter earnings were down a bit out here. I don't see the actual numbers, but boy, this thing is gapped down, and it's got some volume behind its move. Now, in this case here, volume behind its move, it's done 124,000 shares out here. As we pull this back, take a look at it, see where this is headed to. I think we're going to have to switch over into a weekly chart. Right now, she's trying to break below a set of swing points out here from back in August and August and October out here. Now, probably headed to the swing point area from back in February 2013, around $42 to $44 or so, and that is ticker symbol OXM, Oxford's Industries. Also moving to the downside, let's see, anything significant percentage-wise out here. You've got Comtech Telecommunications, CMTL. That is moving to the downside here. This is a daily chart. Volume behind the move looks pretty decent. Volume so far today about 114,000 shares. Now, this is just simply moving down into a sign of strength. If it can't hold the first sign of strength, which has been tested, it has been rejected in the past out here, and that's at a price point of $32.99. Now, the volume on that move higher was 926,000 shares. We've been trading for a little over an hour. It's actually got lighter volume. If it can hold $32.99, then you probably have level of support and a consolidation that could take into the $40 range out here. If it does not hold this area, then we come down, take a look at maybe the next sign of strength, which is down quite a bit to the downside out here. You've got an open gap, and all that means when we say gaps get filled, it's just the same expression as coming back to a breakout area. Breakout area identified with a wide price spread, accelerated volume. In the case of Comtech, CMTL, that's what would take you down into the $25 or lower area. That's the bottom of the gap out there. So if it closes below $32.99, $25 and change is likely where it will head to. If we take a look at the Doug, let's go take a look at, the way we'll take a look at the Doug is let's go take a look at the XLE. That way we can take a look at it for both somebody who is short and long. So let's see, what do we see inside of the XLE? What I want to actually do is start off and look at the weekly chart for the energy sector. The energy sector is the weakest sector inside the S&P 500. And that being said, we ought to go find out what's going on inside the S&P 500. Hey, not that the S&P can't move higher without it, but boy, with regard to the this next bottom that's forming here, taking us into the end of the year, wouldn't you like to see a reversal even inside this sector? Now, inside the weekly chart out here, what do we know? What do we see out here? What does Stevie see? This is what I'm looking for. Here's what I will say is that the XLE will participate in the Santa Claus rally when it can get above the 80-90 level. And that's taking me back, in essence, all the way to the swings points in March and April of 2011 out here. Right now you're trading out at 77.02, so you got $3 to the upside. This candle here for the week right now, what we do know is the week ended October, or the week that began October 13th, 270 million shares. We've done about 130 million shares so far. So you're trading below a swing point with light volume. So that says, hey, just simply on a swing point basis, if by tomorrow the energy sector can close above 77.51, you will have rejected a swing point low with lighter volume as long as it closes above 77.51, because I don't see it picking up that kind of volume to the downside over the course of the next 9, 10 trading hours or so, 11 trading hours left between now and the end of tomorrow. So 77.51 is the number that you want to keep an eye on. Is that a place where you would buy the energy sector? I'd probably have to say no, but you want to get a feel for what's going on inside the S&P 500. Let's go take a look at what's going on with regard to the weakness area. Now, what do we know about that 77.55 level? So far, that's acted almost as resistance. The high today, 77.34, so it has not gotten back up there. Now, what you do have formed today, you do have a bullish engulfing candle. It would maintain a bullish engulfing candle characteristic as long as it closed above 76.65. You're at 76.97. Would you buy just on a bullish engulfing candle? No, I wouldn't. These are signals to be used in conjunction with other tools out there. That's what they are intended to be used for. Let's take a look at the XLK. As long as we're inside these sectors, let's get a feel for the number one weighted sector inside of the S&P 500. That is, you've got an inside day today. Volume so far, 2.5 million. Yesterday's volume to the downside, 8.2 million. We have more volume moving higher today than we did lower yesterday. If we just simply use some straight line math out here, we'll see how the day ends up. Good support inside the XLK is where it had its last gap up. That was at October 31st level. This is how strong the XLK is. Has not made it down there. Doesn't mean that it won't, but my timing tool says that this is the week that we form a bottom out here. Was it yesterday? Will it be tomorrow? I don't know the answer. However, I got enough indications that say, yeah, it's here, or it will be here very, very soon. Let's go take a look at some things moving to the upside out. Let's go look at let's see, percentage-wise, we took a look at Restoration Hardware earlier. I don't think we took a look at Agios Pharmaceuticals, AGIO. Maybe we did, and it just have a bad memory out here. I think we did take a look at Agios Pharmaceuticals. So let's go take a look at something we didn't look at. Let's go take a look at Athena Healthcare. ATHN is the ticker symbol. That's up about $11. Boy, this is a wide-ranging bar for the day. That is a wide-ranging bar. Volume behind the move so far, about 400,000 shares. Let's see what this thing has done. Athena Healthcare. So this thing has a nice hammer candle back here. So we'll take a look at all prices done. This has a big hammer candle back on May the 7th. The top of the hammer was 107.85. Now it was also a high volume-ish type low. That had volume there about 3.4 million shares. That was tested all the way back here October 17th with 2.2 million shares. So what is Athena Healthcare doing? Let me pull this back a little bit further. Come on, work with me. Really just kind of consolidating out here between about 145 to 107. You're trading at 129 as we speak right now. Let me put this on a weekly basis. Does this have any kind of volume or so at the highs out here? Athena Healthcare. The answer is no, it does not. If Athena Healthcare, though, can take out that sort of consolidation zone, meaning getting above, closing above 146.34 or so, then you're looking at a move. Let's take a look at a deeper retracement from high to low out here. Then you're looking for a move into the 165-ish type range. ATHN is the ticker symbol. We got Sherwin-Williams. Haven't looked at Sherwin-Williams. She is painting the town green as we speak, up about $8, up 3% right now. Sherwin-Williams on a weekly chart. This looks pretty good. 52-week or all-time high is where this thing is at. Let me see. Yeah, this thing is at all-time highs right now. If I look at conservative A to B equals CD patterns, let's see. You had a B point, which had 2.3 million shares, was taken out with 3.3 million shares out here. The conservative A to B equals CD, I'd say you come back into that February time frame. That's going to be your A point, really, on your conservative A to B equals CD. That's going to be your low, your B point that I'm going to use right out here. That's on September 29th. Sherwin-Williams, already through the 1-to-1. She's headed to 263, probably 280 buckaroonies. SHW is a ticker symbol. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. Not all gold stocks are the same. This offer is valid for current or new subscribers. All the details are on the front page of TFNN.com. The sale will be over before you know it, so act now and lock in this incredible price by visiting the front page of TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's up about 195 right now. Got an email here from our man Dave from Boston. Dave, good to hear from you. He was asking me about natural gas. He's saying, do I see a trade set up for about a month or two? Said inventories were down and saw some volume come in today. So let's take a look at natural gas. Now, I've got the 30-minute contract up on my screen out here. What we're taking a look at is a 30-minute time frame, I should say. We've got the January contract. And you were asking me about the UNG, Dave, so I'm going to just pay attention to the natural gas contracts, and that is really the underlying instrument here. And here's what we know. If we take a look at the most recent swing point inside the 30-minute chart that takes us back to December the 5th, if we go from that low, or that high, I should say, down to the low, that came in back at about 2 o'clock, 2:30 on December the 8th. What natural gas has done, it's made a 0.786 retracement. The dollar amount there was $3.77, what we actually saw out here during this 30-minute time frame between 10:30 and 11 was a move up to 377. You got to love that. Okay, wide-ranging bar and volume coming into that area. That says to me that what we're likely to see is you're likely to see natural gas. It should get up to about 382 on this next move. It should make a 100% move of a move. If volume were to maintain this level, were to increase on the way up, then we can take a look at this thing breaking even higher. But that's what we ought to see. That's what you ought to see. So what you ought to see take place over the course of the next several hours or what have you would be UNG trade a bit higher. Now, the question is, do I see this as a longer-term trade out here? And the answer is I would like to. We're kind of in the, we're just beginning the winter season. The problem is this. I shared this, I think it might have been during the first hour. Let me put this up here. Let me go to my UNG chart if I can find it. Dave, the problem that I have with saying yes is this slide right here. And this is the historical chart for the last 11 years for natural gas. This helps us to identify when highs and lows are typically made inside this instrument. Now, the beautiful thing about this is this takes winter into consideration. So somebody might be sitting there like me, was like, what the heck is with that cold weather that blew through Florida last night? You know, we don't like it when it's, I don't like it when it gets below 70. Below 70 says you got to turn the heat on. All right, be that as it may. If we take a look at the normal patterns inside natural gas, it forms a low the second week of September. Just right around September 5th, actually. So it could be the first week. So sometime right around there is when natural gas forms low. Now, this year, natural gas formed its low like about 3 weeks later. Can we push this chart forward by about 3 weeks? Yeah, you could. But what you could, I don't know what's going to happen, but what natural gas also does, so picture this, for the last 11 years, knowing that winter really gets rocking and rolling out here, you know, in December and January and February and so forth, what natural gas does is it peaks right here. It peaks right around December the 2nd. That's when the peak for natural gas is in, and then it starts to fall off the planet. Well, now let's go back to the daily chart here for natural gas. Let me get rid of the A to B equals CD tool. We can see the low here, not September 2nd, but October 27th. So it was really pushed back by quite a ways before we saw that low inside natural gas out here. So, you know, is it possible that this is going to go ahead and we can push this forward? Things are going to make a high, you know, maybe. What I can say is I played this natural gas trade out here, played it right down here in this trading range around November 14th. Thought that we might have a move coming into, you know, last week. That didn't work. This thing peaked out. Key reversal session on November 21st. That was a signal that I just simply ignored. You might as well just put the gun to my head and pull the trigger. I won't do that again out here. The answer to your question, Dave, there's no bullish reversal signal as we speak right now. Just an A to B equals CD on a short-term chart. This is Steve Rhodes. This is TFNN. Stay tuned. Our man Basil Chapman is up next. Then we got Larry Pesavento, Daryl Martin, David White, Tom O'Brien, Andy Heck. Have a great Thursday, folks. Look forward to seeing you tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.